Leo, you talked about electronic banking, and yes, I talked about electronic and the kleptocurrencies, cryptocurrencies as they are called now. We face two choices. If these currencies are coming, we could engage with them, or we could pretend they don't exist. And we can only pretend they don't exist at our own peril, because they are there. But maybe let us just have the history of money. You know, and you put it in South Africa. Before the Reserve Bank was created, every commercial bank issued its own bank notes. Even amongst the older people, they might not remember that. But every commercial bank issued its own bank notes. It is only in 1921, when the Reserve Bank was created, that government created a monopoly and said that only the Reserve Bank can issue notes and mint coins. So, in so doing, the banks then could no longer issue their own currencies. And amongst the things that central banks globally are grappling with is if the public would be looking for these cryptocurrencies, how would it affect monetary policy, and how should the banks, the central banks engage with them? As it stands, it's not legal tender, those cryptocurrencies. But people seem to be trading in this stuff. Who is behind them? What is underpinning them? And if it's not honored, who stands behind it? We need to distinguish two things. One is the technology behind the cryptocurrencies, and the other is the currencies themselves. The technology that underpins the cryptocurrencies, which is the blockchain technology, and including the distributed ledgers, that technology could actually be very useful in doing things. At the moment, people have looked at it and narrowed it simply to cryptocurrencies. We are assist with it, we are engaged with it, and through the Bank for International Settlements, central banks internationally are having a working group where we say, what does this mean for the world of central banking, and what does it mean for money as we know it today? It's an evolving thing, and it's going to be a tricky thing.